I'm Jessica Minton for IB Times TV, and I'm joined by Joseph Greco from Meridian, who's going to weigh in about the latest economic data. Joe, it's good to see you again. Thank you for joining me.
Thanks for having me.
So we saw earlier today that jobless claims ticked up a bit, but the 4-week moving average actually fell. However, a report came out a couple weeks ago that the number of Americans dropping out of the workforce is at a record high. What's the bigger issue here, that jobless claims are declining or that more people are dropping out and it's not necessarily being taken into those jobless claims numbers?
Right, there's definitely a bit of a divergence there because of course you have the big headline that everybody looks at and says, oh, things are improving, there's less jobless claims than the last week. But you also have the on the street type of investigation which says things aren't really getting better, and that is of course because the number in the pool is reducing drastically. And then while that number, as you said, reaches a new time high, the number of people who've dropped out of that pool, it makes you question what is really going on, and is unemployment actually improving? Is it staying stagnant, or is it actually drastically worse than it is? So that still needs to be fleshed out, and the difference between Washington and Main Street is quite disparate right now.
Manufacturing in the U.S. grew for March, and then we also saw existing home sales hit a 3-year high. If we can continue to see these kind of patterns, do you think the Fed will start discussing a change in monetary policy?
Interesting question in light of yesterday's minutes and yesterday's statement from the chairman after their meeting, in which case he indicated no interest whatsoever in reducing the pedal push until 2015. So I think we could see for the foreseeable future that the Fed is going to continue to do both asset purchase programs that are in effect right now. That will keep the market buoyant where it is. But I would caution everyone to get too reliant upon that because, as you said, those are two major components of both the labor force and, of course, the economic recovery. And if you see home builders really start to rev the trucks up, and you see that the new home builds start to increase drastically, you're going to see that unemployment rate drop precipitously. And once we get near that magic 6.5% level, that's when the Fed will absolutely be stepping back, and that's when we need to learn. That's when we'll learn quickly: is the market able to sustain without the Fed being involved?
And finally, we did see China's PMI beat expectations, especially after their twin PMIs from a couple weeks ago missed. Do you think investors should be a bit more optimistic about the global economy now?
Yeah, I think, for the most part, very intelligent people looked at that and breathed a little bit of a sigh of relief. Most people, the middle America, I don't think recognize what that really could have meant if that continued to be the trend and there was an actual, a real faltering of the economy over there in China. Clearly they hold the majority of the world's, and especially the U.S. debt, and we need to have that on the mend. So having that, reaffirmation is comforting at this level.
As always, thank you for joining me. It was good to see you.
All right, thanks for having me.